Yo, what's going on, guys? Welcome back yet to another video. So I'm gonna make another trade recap. Right now I'm actually doing it in the live markets because a lot of you guys really liked the last one. So of course I'm gonna provide what I can, right? So as you guys know, the reason I make this video is just to show you how I analyze trades, how I get my framework, and so you guys might take some inspiration or just add it to your already existing strategy. So what we can start by doing is we can go to the weekly, right? Because if you remember in the last video, I explained what do I always do when I go into the market. I ask myself, what did the last week do and what can I do in relationship from the last week for this week, right? So we can just remove the executions for now, and we can focus on what did we do the last week. So let's just remove all of this for now, and then we can go to the weekly time frame. So it's way more clear on gold, and I'm gonna show you why. So as you guys remember in my last recap video, I was explaining how I framed the gold trade. So I expected this whole week to expand into key weekly objectives. And what we can see is when we hit this low on Friday, we can see that Monday, since we don't have enough range, obviously on Friday, if we hit that key low, we don't have enough strength to actually trade away from this. So that's generally speaking, where early on Monday, we can force a sort of reversal for the next up and coming days to expand away from this point of interest, right? So what we're forming right here on the previous week low on gold is we open low into the previous weekly low, right? And then we're forming sort of reversal on Monday, so Tuesday can expand into key highs. And what do we have here? We have a key high, right? This is our relevant swing in the market. There's gonna be a lot of it in this video, guys, so take notes, okay? So we have this relevant swing. We can see that Monday forms a reversal when we already hit that existing low the last week on Friday, right? And that's where we hit this key high. Now I'm not gonna focus on this, I'm gonna focus on on Wednesday, and why we can actually frame trades higher from here. Now, since I took both trades on gold and silver, I'm gonna start by doing silver, right? So when we hit this high on gold, there's signatures in price that gives us the indication that we're either gonna reverse of this high or we're gonna continue past that high, right? And what we're seeing right here is that on gold, we can see when we hit this high, we have a failure to reverse. And why is that? It's because we're forming a continuation signature where we're basically just retracing back inside the range. There's a lack of volume, lack of displacement to actually trade lower from here. So this is what I see as a failure to reverse, where if we're not going to reverse of this high, what's the next target going to be? It's going to be this high, of course. And that's where you want to see some strength switching going on silver. And specifically, we can look at, if we go back to the daily time frame, we can see, weekly time frame, we can see from the previous week, you see how the low of a week was different on both silver and gold, where low of a week on on gold was Friday, right? Because we expanded into this low, while on silver it was Tuesday low, right? Because we failed to actually take this out. And that is that's where we formed this SMT right here, right? We formed this SMT on Friday, and then we're forming some sort of reversal on Monday. So that's where we expect Tuesday to expand. Now we can see that gold was obviously stronger since it took out this high, which is 26th of June. This is the exact same high. And this is what I see as a fake SMT. And the reason it's a fake SMT is because if we're actually failing to reverse, right, you see how we're forming this continuation signature. Now this is a red flag right here. The reason it's a red flag is because we're making equal lows. Now there is criteria for us to actually frame trades past. Like we can form 4-hour profiles to get that idea that this is not going to get traded to, right? And that's what I did today. I'm going to explain how I did it. So let's just repeat everything again. We understand that we had different low of weeks. We're seeing that silver on Monday actually fails to take out this low. So since we made this SMT, we're opening low first, exact same signatures on gold. But we can see that gold, look at the wick size. You see how the wick is way smaller on gold compared to silver. But it's still, you know, that's the whole reason we didn't take out this high. And that's when the next day can continue the expansion into this high, right? Now, we can see on gold, we can see that if you look on the range right here, we can see that, like I said, we are retracing. So we're just coming back into 50% or the upper quadrant of the previous daily range. We're closing above opposing candles on the daily time frame as well. Just giving us all the indications that the next relevant swing is going to be the previous daily high, right? And this is intraday where you want to see some strength switching going on, right? Oh, sorry, I forgot to mention one thing as well. is that from the previous week, we also took out a significant sell objective, which just gives us more the idea of price coming higher this week, especially when we also have a SMT on the previous week's low. So technically it was created right here, but since low of week was or the low of this week is right here, and we still holding this low, is technically here. Okay, so now I'm gonna go into the 4-hour profiles and how you can frame trades here. So what we see is that the 2 EM takes out the previous 10 PM candle low, right? And then we're forming some sort of reversal candle here where we're close back inside this previous 4-hour range, right? And that's where you can expect 6 AM to actually expand away from that. Now we didn't really get a displacement here, but the upside bias is still valid, right? Because we are inversing like 4-hour gaps, you know, disrespecting the bearish P race, showing us indication that we want to go higher. Here's where we can frame profile. So here's where my analysis is going to come in and why I took this trade. So if we go back down to the if we go down to the hourly time frame, we can see right here that we are forming a protected low, right? We're closing above opposing candles, and if we mark out the sessions, we can see that we opened low, so London making low of day. We're closing above opposing candles, so if you guys know, this is going to be a protected low, of course, since we're closing above opposing candles. It's the same principle and on every single time frames. You can see that the 4-hour gap right here, we're retracing back. We're holding this 4-hour inversion gap, and we're also coming into this fair value gap on the hourly time frame. So holding bullish P race while disrespecting bearish is clearly a signature that we want to go higher. And we already have our failure to reverse right here, reforming that continuation signature, right? And this is where you want to target relevant swings in the market. Why am I not targeting like this, or sorry, this high or these highs? Because I see them as failure swings to this relevant high, right? I don't expect us to use reverse of these highs, right? So if we go back to the 4-hour time frame, if you look at the 10 AM and 6 AM candle, we can clearly see right here that we are making a lower low on gold, making a open low into that previous 4-hour low. We already understand that we have low of day, which is going to be London low, and we're forming a protected. It's protected, right? So all we see this as a retracement to expansion. So reversal to expansion to retracement to expansion, right? We understand we have a 4-hour SMT on these lows, so that is showing me that overall silver is the strongest asset, right? And if we go back to the hourly time frame, we can see right here that on the hourly, forgot to mention this, we are also closing above. After we hit this inversion gap, we are closing above this hourly opposing candles, just making more protected lows to trade away from. So that is the signatures we look for. So that is when we can expect the next up and coming candles. So we didn't have, there's a lack of volume here, and that can be because it's NFP tomorrow, you know. So that is one reason why that could happen. But overall, we can see that GC is starting to catch up, where we first was using this consolidation range, right? And now we're making some, if you look on AXA Euro, we can see that, like, I think it was on the 30 minute, we can see some strength switching going on here, where we take out 11 AM, 11:30 takes out 11 AM low on AXA Euro. So you see how we're making this higher high here. So we're forming a new phase of price. So we make candle 1, 2, 3, new 4-hour candle. We come lower, so just a retracement, and then we can see AXA Euro takes this out right here, and then we make this SMT for the next up and coming candles to expand. Now we have relevant key targets. So we have this high, which is going to be the previous day high, and we have these intraday highs. So this would be high of day, where you can take partials. Now this is really a shame here. I actually took this trade as well, but I actually turned out to break even, which is super sad. I'm not gonna lie. We can see right here that I first took my entry around retest of this order block. I was obviously gonna target the previous day's high right here. I took 2 positions, so 2 contracts right here. So yeah, this is a pretty good trade here, guys. It's a 226 tick take profit, you know. Of course, I would take partials at the current high of day, but we basically came down right here, took me out break even, then we expanded. Hey, it happens, guys. What can you do? But as you guys know, I'm still in this silver trade right here, which is good, right? But just lack of volume, which is not great overall. But let's now go to and see the profile I was trading here. So we're making a candle 1, 2, where 10 AM opens low. right, on GC, we takes out that previous hourly and 4-hour low, and that's where I actually start framing trades within this profile right here. So what we can see is that we make a change in state of delivery, right? And then after that, we create another order block after we tag this 5-minute fair value gap. So that is when I expect this low to get held, especially when we close above here. We already tagged this gap, so there's no reason for this low to get hit again, right? So yeah, I mean, that is pretty much it. It's pretty much the same principle in gold, where I took the trade. We did make like lower lows here, as you can see, while silver made higher highs right here. But I still expected gold to catch up to silver, so I took both of them basically. But yeah, I mean, we're pretty late in the day, so I'm probably gonna get out soon if we don't get some sort of delivery, or I might just hold to the New York PM session that can continue, right? Because we already have 3 hours into that 10 a.m. candle, so that's generally speaking where that 2 p.m. open, new 4-hour open, can continue the expansion, because there's not enough fuel within this candle to expand to this high. Now, can we do it? Of course we can, but we need, you know, it is more logical that the next 4-hour candle will continue the expansion. I don't think let's just do a quick recap of everything right here, and then I'm gonna end the video. So what we can see right here is we understand that from the previous week we hit key targets. We understand that we opened low first on a Monday, where we made SMT with the previous week low. We're forming that reversal signature where we expand, right? GC hits a relevant swing high in the market. We fail to reverse, giving us that signatures that price is going to continue to the next previous day's high. Now, we can see on silver when we fail to take out this high, and that is the main reason could be because we made a bigger wick on silver on Monday, so there's not enough volume within this. I mean, we can still do it, of course, but overall, since we made a small wick on Monday, that's generally speaking that where Tuesday is gonna have, you know, closer to the target, basically, if that makes sense. So that's where I expect either today I don't expect today to take out this high, because there's like, we want relevant key like drivers or times for volume to come in, like 10 a.m, you know, stuff like that at relevant times, or drivers like 8:30. But since there's not enough volume, I expect previous day's high to get taken, but I don't necessarily think we're going to take out this high today. But that's when we can expect early on in the day to continue the expansion, because we already have a protected low to trade away from. So yeah, I think that's pretty much it, guys. If you liked the video, you know, give it a like and comment what you guys would like in the next video. So yeah, we'll see what happens. That's pretty much it. Goodbye, guys.